One of the smallest things that separates a good trader from a bad one is knowing when and how to shift your stop loss into a profit. And in this screen recording of yesterday's live trading session on gold, I'll show you one simple way that utilizes the Fibonacci Retracement tool to do just that in a continuous fashion to keep up with your floating profit.
Some clarification up front, this is a CFD trading account that had a small trading balance of $4,000 just before entering the trade you see here. I have offered my price action breakdown and chart analysis that led to why this trade was worth entering in a separate video.
But let's say we're swing trading gold and have just entered a long position to capture the upside potential, with the risk-reward ratio initially set at 1 to 10. You wake up the next day, check the chart again, and see price going exactly where you want it. But what do you do between now and your exit to manage the risk of a sharp pullback in this rally? If you're whispering nothing, think again. So let's bring out our Fibonacci retracement right now. Draw an uptrending line starting at our recent swing low and stop at the last swing high. The current 1 hourly candle is yet to finish, but just to illustrate, let's say our swing high is at 1639.
By the way, try not to get caught up in mathematical precision here.
And now we have all these beautiful levels of retracement automatically worked out by Fibonacci. You want to move your stop loss into profit to lock in a portion of the floating profit that satisfies your personal target for the day. So even if gold is to suddenly retrace severely, you will still have seized some profit that you're happy with. And if gold continues escalating all the way to your target profit level, you'll be continuously adjusting your stop loss upwards using the same Fibonacci retracement analysis. The alternative is, of course, to exit early, as you may have found better assets to trade and need to simply capture a wall profit you have floating right now and free up some balance to enter other trades. A strong rally is generally characterized by strong momentum with few and very mild retracement, which is what we observe here in the 1 hourly chart. So it is unlikely that we'll see gold retrace below the 38.2% level from where it is now. For safety,
and by safety I mean giving gold enough room for retracement so that your long position isn't stopped out prematurely with too little profit,
you may choose a level between 38.2% and 50%, just underneath where gold last had multiple rejections. But of course, if you're working with a daily target profit and would rather lock in some more profit, you may also consider bringing your stop loss up to just below the last 1 hour candle's bottom wick. You can zoom out to see the larger picture here and reason if retracement 38.2% is likely to form a support level in conjunction with earlier hourly price behavior. And so as price moves up north, retraces a little, consolidates, moves further up, and repeat, you too will repeat the Fibonacci retracement analysis to keep adjusting your stop loss upwards to lock in more and more of your running profit. I want to stress that at the end of the day, there is no real right or wrong way to move your stop loss because every trader works with a different set of parameters and daily targets. But moving your stop loss into profit is one effective way of risk management for sure. I'm very confident there are some curious cats out there who want to know how this particular trade finished. So here's an update. You can see a new hourly candle has just emerged and confirmed my earlier description of a strong bullish momentum. I have placed a box here to help you see the fair value gap, which gold price has filled and broken above rapidly. So in addition to another Fibonacci retracement analysis, I have used the fair value gap as a supplementary tool in deciding where to move my stop loss to. In this case, it's just below the bottom limit of the fair value box, as you can see. Final update here. So I decided to exit the trade early and simply take my 12% profit, as that's what I'm happy with for this small account. There are a few important reasons behind this decision, of course. Firstly, we have the US job data release in just a few hours, which is high impact and can sway gold price strongly either way. Secondly, as you can see in the 4 hourly chart, we're still traveling in a descending channel. And given that gold is nearing the upper limit of the channel, the upside potential from now may be rather limited. So for these reasons combined, I have closed out my position and pocketed a few $100s, which is exactly what I can use to participate in an FTMO challenge if you like. I hope you have enjoyed this quick video on stop limit adjustment. If you find it useful or have any questions or feedback, I'm all ears. See you next trade.